What's up, everyone? Today we're talking about Nike stock, and it is an absolute bloodbath out there for Nike today, down 5%. And if we look on a 5-day chart, you can see that they reported earnings and the stock absolutely fell off a cliff. So in this video, we're going to talk about what happened in that earnings report. We're going to talk about Nike's valuation and how I'm generally thinking about it as an investment. I do also personally own Nike stock, and if we look at my portfolio, I have 36 shares at $90.91. So I'm down about getting close to 30% on the stock, and I also want to talk about what I'm doing with this position later on in the video. If you're new here, my name's Sheldon. I've been investing in the market for over 5 years. This is my portfolio. As you can see, since about mid-February, we've taken around a $10,000 hit in the portfolio, and I like to keep it real. This is just the reality of going through a market correction. These are all the stocks that I own. You can see each of the percentage returns that I have in each of the positions in my portfolio. And guys, I'm not claiming to be an expert. I'm just some guy that likes to share what I've learned along the way investing. And so if you're interested in learning about the market, staying updated on stocks, then subscribe to the channel and let's go on this crazy journey of investing together. So let's get right into it. And I want to start by giving an idea of where Nike stock is currently trading. So obviously it's not the best day for Nike. Down over 5%. It's been hovering. I think it touched down 6% at the beginning of the day. And you can see it definitely fell off a cliff there. Year to date, we're down about 10%. On a 1 year, we're down 32%. And I believe this is where I started buying. It was in the summer of last year, around June, in the 90s. And then boom, I literally bought into the stock and boom, it fell off a cliff. So that was awesome. 5 years, we're trading roughly flat on a 5-year chart. But I do think that this is pretty much a 5-year low here today. If not, we hit basically the same as the 5-year low because this was around COVID. It hit around $67. So it's been a rough 5 years for Nike investors, okay? It's floating around $100 billion market cap, trailing 12-month revenue of $47 billion. If we look at price to earnings ratio, which this is an interesting one to look at and compare to competitors, it's trading at about a 22 price to earnings and a forward PE of almost 40. So the forward PE, that seems a little bit expensive, if I'm being honest. And if we compare the PE to something like an On, so if you're unfamiliar with what On is, they also create running shoes and I think some athletic apparel. I know that they're a big competitor to Nike in the running shoe space. They're trading at a 54 price to earnings ratio. But they've also had, I believe, probably, really good positive revenue growth for the last 5 years, like really good revenue growth, actually, like 70, almost 50, 30%. So, I mean, when you're putting up those type of revenue numbers, it's easier to command a higher price to earnings ratio. If we look at Lululemon, which is also kind of an athletic apparel competitor for Nike, they're trading at roughly the same price to earnings ratio. So the price that you're paying in terms of how expensive the valuation is for Lululemon is roughly the same as how inflated the valuation is for Nike. But if we look at price to sales here as well, and price to sales is basically a multiple of revenue, so top line, and price to earnings is basically a multiple of earnings per share, which is the bottom line, which is an easy way that you can think about price to sales and price to earnings, just valuation metrics. So the price to sales on Nike is 2.2. And if we look at something like Lululemon and find the price to sales, so they're trading at almost a 4. So you could say that Lululemon is a slightly more highly valued than Nike, which makes sense. Even though I'm not sure what Lululemon's revenue numbers are, but yeah, look at that. They're actually all positive and pretty good. So when we look at Nike's annual revenue, it's been a couple negatives there and then some very slow growth. You know, they had a good 2021, 20% revenue growth, but the last couple quarters as well has been really not that good. They've reported 4 quarters in a row now that have all had negative revenue growth. So that's definitely not ideal. Another thing that I find interesting to look at when it comes to stocks and Nike specifically right now is if we look at a market cap chart on, let's say, a 5-year, So they peaked at a market cap of around 280 billion, and currently they're trading at 100 billion. So they're roughly trading at a third of what their peak market cap valuation was. Which, that's not the best story if you're a stock market investor, to have the valuation come down by a third on almost a 5-year basis. So obviously they are going through some rough times. It's been mainly due to, I know they had a really big increase in inventory and they struggled with inventory after COVID and selling all that off. They also kind of ran away from wholesalers and physical stores and pulled some of their products off the shelf and focused mainly on their direct-to-consumer side of their company, which that turned out to be a little bit of a mistake. And there's also been some macroeconomic uncertainty in the market, obviously, lately. And you can blame that a little bit for a pullback in a lot of stocks, but Nike, they definitely have their own specific problems in the stock. You can't just blame Trump and tariffs for Nike going down right now, especially in the last 5 years, obviously. You can say it's obviously a volatile time in the market, so maybe a 5% reaction to the downside on earnings is maybe a little bit of an overreaction, but I mean, let's take a look at their earnings report here. Third quarter, this is their third quarter of fiscal 2025. If you're wondering, their fiscal year is a little bit different than most companies. They just reported earnings on March 20th, when a lot of other companies were reporting almost early in around, I think early February was when a lot of big tech companies were reporting Q4 of last year. So their fiscal year is a little bit different than most companies. But so third quarter revenues were 11.3 billion, down 9%. Nike direct revenues were 4.7 billion, down 12%. That is, you never want to see get out of here. Why are you doing that? Stupid PDF Adobe. But 12% to the downside of Nike direct revenues. That's not good, guys. That's pretty bad. That is, yeah, you don't want to see double-digit declines in key segments of the business, too. They focused on Nike Direct for a long time, and now they're kind of pulling the Uno reverse and focusing on wholesale more so again, but still 12%, down 12% in Nike Direct revenues. That's not very good. Wholesale revenues were 6.2 billion, down 7%. So, I mean, almost half of what they were down in direct revenues. Gross margin decreased by 330 basis points to 41.5, which I believe is their lowest gross margin that they've ever had in maybe not ever, but recently in the last, let's call it 5 years. If we find their gross margin here. Gross margins, so on a yearly basis, there been 43, 44, 45, 43, 44. Trailing 12 month is still 43, but if we look on a quarterly basis, it's probably gone down almost every quarter. Gross margins, so yeah, let's just look since Q4 2024, it was at 45%, 45%, 43%, and now boom, it took a pretty big hit to get down to 41% gross margin for this quarter. So that's obviously not ideal, to go down, and I think they guided as well to have their gross margin go down even more. They did report 54 cents earnings per share, and if we compare that with quarterly earnings per share, that's also been coming down quite substantially, a decrease of 30% earnings per share, which somehow I think they actually came in above analyst expectations with 54 cents earnings. I forget what exactly a lot of analysts were guiding or expecting Nike to come in with for earnings per share, but I read some things where they beat expectations, and yet they're still down 30% on quarterly growth. That's not good. I also on the earnings call, I listened to a large chunk of the earnings call, and Elliott Hill's a solid CEO, right? I don't think anybody can say Elliott Hill is not there to help grow Nike and bring it back and try to push the Nike brand and the business back into the direction of solid profitability, solid and sustainable profitability, right? And I don't think they mention it here. The progress we've made against Win Now's strategic priorities we committed to 90 days ago reinforced my confidence that we are in the right path. Yeah, so on the earnings call, he also did say that he knows that they could be doing better right now, and he recognized kind of the situation that they were in. I don't think they're going to put it front and center of their earnings release here, but he did mention that, and I'm confident that Elliott Hill knows kind of what is, like, he's realistic with the situation that they're in, right? Like, he's not just trying to wrap it up in some pretty bow and only talk about how the good things that have happened in the business. Another bad thing of this earnings report is revenue for Converse were down were $405 million, down 18%. Oh, you're killing me. 18% is not good. I mean, like, obviously Nike owns Converse, they own Jordan, and I'm not sure where those numbers are. Maybe they're in here somewhere. I didn't see them, but down 18% for Converse. That's pretty bad. And if we keep going here, I highlighted a couple other numbers that I wanted to touch on, like net income. So net income, obviously, like, yeah, similar to earnings, it's down 32% from Q3 of 2024. It was $1.1 billion, and Q3 2025 was $794 billion. So it's not looking good on a quarterly basis there. You know, there was a couple good things, like their selling and administrative expense came down a little bit in this quarter. So, you know, that's something that is making the company keep a little bit of revenue and save a bit of money there. Their operating overhead expenses were also down a little bit. So there's a few little efficiencies that have shown through the numbers in their earnings report that, you know, there's some hope. There's some hope to grasp onto as a Nike shareholder. But all in all, it was definitely not a quarter to be, like, excited about that, wow, like, Nike is coming back now. Like, there's been this narrative of this comeback story for Nike, and it's one that I believe in, right? And we'll get into why. But it definitely did not get reflected in this earnings report. So, you know, we'll see what happens in the next one. And, you know, it's hard because even going into the next quarter, like, talking about the macro landscape in the market right now, like, it's definitely not ideal to be trying to scrape your way back up out of a hole. And that's kind of where Nike's at right now. So what have they been doing to actually try to get back into, you know, sustainable, good revenue growth numbers and profitability? One thing that they did in the last quarter was they partnered with Kim Kardashian. You know you're fucking desperate when, okay? You partner with Kim Kardashian to save the brand. Nike teams up with Kim Kardashian shapewear brand Skims to reach more women. And, like, I'm just joking around, right? But Kim Kardashian is obviously a big name. You know, she has, I don't even know how many millions of followers on Instagram, and she can connect with maybe a more female audience if that's what their plan here is. You know, I don't think this actually launched, or I don't think this is actually launched yet, and I think they plan to launch this in, like, this quarter that we're just entering right now for Nike. So that's one thing. Maybe that will be reflected in their quarterly earnings reports in a positive way. Other things are that, you know, they pulled out a couple Super Bowl ads. Nike's back at the Super Bowl after nearly 3 decades. I believe it was about 27 years since we saw a Nike commercial in the Super Bowl. So, I mean, they did spend, what was it, like $1 billion in demand creation expense. So you'd hope that if you're spending $1 billion in demand creation, maybe you get a Super Bowl ad or two out of that, because I think Jordan brand also had a Super Bowl advertisement. So they had 2 Super Bowl ads, obviously, in the Super Bowl. Huge audience watching that. And obviously, not only did they have an advertisement, but there's sponsorships everywhere. A lot of athletes are repping Nike cleats. I think even, like, Kendrick Lamar at the halftime show was wearing Jordans or Nikes or something like that. So you just see the Nike brand everywhere when you're when you were watching the Super Bowl, even if you didn't even really realize it. But So that was one thing that they did to get a lot of exposure in the quarter. Another positive and bullish thing that's happening for Nike right now is Pershing Square Holdings, which is Bill Ackman's investment company. They are actively invested in Nike. And they did convert their common equity position into deep in the money call options, which it's still a bullish thing. Like, they're still invested and they're still betting on the stock price of Nike to go up. So it's kind of interesting to see, who these like big mega investors are, or what these big mega investors are investing in. Like Bill Ackman, he's somebody that I like to follow. And the way that he talks about investments and his investing thesis. I think he's a very intelligent guy, and obviously he's had a lot of experience in the market, and he's also betting on Nike. So, I mean, it's just something that's interesting to keep in mind. It says here in one of their annual releases that we continue to believe that Nike has the potential to be one of the great large cap consumer turnarounds. And I do personally agree, okay? Like, Nike is such a global brand. They operate, I believe I heard on their earnings call that they operate in 190 different countries around the world. And to me, that is their moat in the business, right? That's their competitive advantage that they have. And to look at it, like, they are obviously, it's a huge company, right? Like, just their market cap in the consumer discretionary space is $100 billion. If you look at the market cap of Lululemon, it's like $40 billion. So it's more than double the size of Lululemon, and On, obviously, it's way bigger than On. But it's by far the biggest consumer athletic apparel brand in the world. Everybody knows, you can go to 190 different countries and talk about Nike, and everybody's going to know what you're talking about. And I believe that staying power in a brand isn't something to just kind of overlook, and I believe that having that is super, super powerful. And if they can continue to just execute on, Elliott Hill's win now strategies, I think that they can have that turnaround story and get back to some at least lower revenue growth numbers. Like, on a quarterly basis, obviously it's not looking good. But if we can get back to some green numbers, it might take 2, 3, 4 more quarters to get there. Like, I'm not saying it's going to happen even next quarter, but you should start to see in the next 2 quarters something getting reflected in the numbers that's positive, right? Like, that would be enough time. A full year and a little bit would be enough time to really see some KPI metrics come back, and you should see some positive things reflected in those upcoming earning reports. If not, that's something to look at as it comes, for sure. But, the bet right now on Nike is that there is going to be a turnaround in the stock. They are going to get back to sustainable profitability and some revenue growth quarterly, and they also, like, pay a dividend. I would be okay, like, personally as a shareholder, I'd be okay if they cut back on the dividend. I know it's something that they kind of probably pride themselves on, of having a dividend and continuing to increase payout and return money to shareholders, but and it's maybe because I'm not necessarily a dividend investor. I'm kind of more in this for the capital gains. But, cut the dividend a little bit. I'm okay with that. Put that money towards being more efficient, trying to increase your gross margins back up to some normal levels as to where they normally are. And just focus on the brand. Focus on company efficiency, operational efficiency, and get back to those wholesale channels. Another thing that Elliott Hill mentioned on the conference call was that he was in a lot of talks with all their wholesale retailers. So that's good. I think he's driving it in the right direction. It's obviously going to take a couple quarters to get there. And personally, for me, my bullish thesis when it comes to Nike pretty much remains intact. It's basically what I just said. And if we look at my portfolio, obviously it's down. It's down like 30%, and that is not ideal to have in the portfolio, but I'm not going to sell my position. The only way that I'm going to sell out of my Nike stock here is if in the coming quarters, in the next couple quarters, as they release their earnings, it shows nothing more than deterioration of the business model. If Elliott Hill starts to come out and say some things that I don't agree with, I'm not even sure exactly what that would be until I hear it maybe, but, it's those type of things that you have to pay attention to. You have to continue to pay attention to the quarterly earnings report, the fundamentals of the business, and obviously it's been volatile in the market right now. So you just have to ride out that volatility. This is probably a minimum a 5-year investment, right? Like I'm not in Nike stock because I'm like, wow, I'm going to flip a profit in this thing in the next year, especially now, right? Like I fully understand that this is a very long-term bet. And it takes a long time for companies to implement new strategies and implement like the win now strategy. For example, it's going to take a while for that to, get built out through the company and then get reflected in the numbers and in the financials. And we'll see it. We're going to get a chance to see it in the next couple quarters here. But as for my Nike position, what I'm doing, I am not buying anymore. I'm not selling, I'm just going to hold my shares. So that's what I wanted to talk about for Nike stock. If you liked the video, subscribe to the channel for more videos like this one. I just released a video where I interviewed a venture capitalist, and I highly recommend you checking out that video if you're interested in business and investing. We talk about how to build wealth and how to be smart on your investment journey. I'll have that video pop up on the screen in just a second. Thank you so much for watching the video. Peace.